Financial markets, much like the ocean, are in constant flux. They ebb and flow, driven by a myriad of factors that can seem impossible to predict. Yet, within this apparent chaos lies an underlying order, a rhythm of rising and falling tides that can be harnessed for profit. This is the essence of trend following, a time-tested trading strategy that forms the bedrock of my book, Trend Following. Trend following is not about predicting the future, it's about identifying and capitalizing on existing trends in market prices. Think of it as surfing. A surfer doesn't create the waves, but by understanding their patterns and timing, they can ride them to shore. Similarly, trend followers aim to ride the waves of market momentum, profiting from both bull and bear markets. In essence, trend following is about embracing simplicity and objectivity. This book serves as a comprehensive guide to this fascinating world, unveiling the secrets, strategies, and psychological fortitude required to succeed as a trend follower. At the heart of trend following lies a simple principle. The trend is your friend. Identifying and aligning with trends is key to profitability. Trend following is systematic, not about hunches. It follows predefined rules for trades. Risk management is paramount. Losses are inevitable but must be controlled. Diversification spreads risk across markets, from stocks and bonds to currencies and commodities. The roots of trend following trace back to the early 20th century, with Richard Wyckoff pioneering technical analysis to identify market trends. In the latter half of the century, computerized trading and iconic figures like Richard Dennis epitomized trend following principles. Dennis turned a few $1,000s into over 200 million by following trend-based rules. He trained ordinary individuals, the turtle traders, who achieved remarkable success. Nicholas Darvas, a dancer turned investor, developed a unique method for identifying stock price breakouts. These pioneers laid the foundation for modern trend following, inspiring generations of traders. Trend following requires understanding its mechanics and tools. It relies on technical analysis, evaluating securities by market activity. Technical indicators are key, using historical data to identify trends. Moving averages smooth price fluctuations, highlighting trends. Breakout systems signal potential momentum shifts. Algorithmic trading ensures precision and removes human emotion. Backtesting optimizes parameters, aligning with risk tolerance and goals. Section 5. The psychology of winning. Mastering emotions in trading. The true challenge in trading lies in the psychological aspect. Emotions like fear and greed can lead to impulsive decisions and financial ruin. Withstanding drawdowns is crucial. Drawdowns are inevitable and emotionally challenging. They can lead to doubt and premature exits. Successful traders see drawdowns as part of the process. Controlling greed is another hurdle. It's tempting to lock in profits prematurely. Trend following is about riding the wave of momentum. Section 6. Navigating market tides, applicability and adaptations. One of the key strengths of trend following lies in its adaptability across various market conditions. Unlike strategies that rely on specific market forecasts or economic outlooks, trend following thrives on volatility, profiting from both bull and bear markets. In bull markets, characterized by rising prices, trend followers ride the wave of optimism, entering long positions and capturing profits as prices climb higher. Conversely, in bear markets, where prices are falling, they employ short selling or utilize inverse instruments, profiting from the downward momentum. Furthermore, trend following is uniquely positioned to navigate black swan events. Those unpredictable and high-impact events that send shockwaves through the financial markets. While no strategy can fully predict or eliminate the risks associated with such events, trend following's emphasis on risk management, diversification, and cutting losses short allows practitioners to weather the storm and potentially even capitalize on the ensuing volatility. However, trend following is not without its limitations. It tends to underperform in sideways or choppy markets, where price movements lack a clear trend. Section 7. Triumphs and Tribulations. Case studies and criticisms. Trend following is backed by history and empirical evidence. Nicolas Darvas turned a modest sum into a fortune using trend following. Richard Dennis's Turtle Traders proved trading success is a learnable skill. Critics argue market prices reflect all information, challenging trend following. Proponents believe trends exist due to behavioral biases and can be exploited. Section 8. Embarking on your trend. Following journey, resources and tools. Embarking on the path of trend following requires access to the right resources and tools to navigate the complexities of the financial markets. Fortunately, a wealth of information and technological advancements have made it easier than ever for aspiring traders to get started. Numerous books, courses, and websites delve deep into the intricacies of trend following, providing comprehensive insights into its principles, strategies, and psychological aspects. My book, Trend Following, serves as a comprehensive guide, offering a deep dive into this fascinating world and equipping readers with the knowledge and tools needed to succeed. Furthermore, online trading platforms and charting software have become indispensable tools for trend followers. These platforms provide access to real-time market data, a wide array of technical indicators and backtesting capabilities, allowing traders to analyze historical data, develop and refine their strategies, and execute trades with precision. Section 9. Trend Following in the Modern Age. Recent developments and future outlook. The world of finance is in constant flux, shaped by technological advancements, evolving market dynamics, and shifting regulatory landscapes. Trend following, while rooted in time-tested principles, has also adapted to these changes, embracing new tools and methodologies to maintain its relevance in the modern trading environment. The rise of big data and machine learning has opened up new frontiers for trend followers. Sophisticated algorithms can now analyze massive data sets, identifying subtle patterns and trends that might not be visible to the human eye. This has led to the development of more sophisticated trading systems, capable of adapting to changing market conditions and generating more accurate trading signals. Moreover, the proliferation of exchange-traded funds, ETFs, has significantly broadened the investment universe for trend followers. ETFs offer diversified exposure to a wide range of asset classes, from stocks and bonds to commodities and real estate, making it easier for traders to implement diversified trend following strategies. Despite these challenges, the core principles of trend following remain as relevant as ever.